Meantime, this story about NVIDIA's Jensen Huang to the FT beginning to soften some remarks that he made to the newspaper after initially saying China is going to beat the U.S. in the AI race. Now out with a statement saying, as I have long said, China is nanoseconds behind America in AI. It's vital that America wins by racing ahead and winning developers worldwide. This notion, Jim, that we're being held back by cynicism is starting to grow.
Well, I'll tell you, Jensen mentions the crucial thing, and this is the argument that I think that some in the administration fail to understand, which is you have all these developers over the world, and that's who you're trying to win over. And you don't know whether the developer is going to develop a so-called right on China or on us. Whoever the preponderance writes for wins. And Jensen, I think, is saying, in terms of cynicism, look, we don't want the Chinese to win, but the only way to win is to get as many people many software writers to write on NVIDIA, and then it doesn't matter. You encircle China. So then China has to fold. I don't understand why these people in the government don't understand that. Jensen has been saying this for a year, that you have to have them. And by the way, Apple feels the same way. You got to have people write on your.
Right. No, I understand, but they were interesting comments from Jensen Huang.
You mean it was peak? He was peak. It was peak.
And by the way, the first graph of the story is about lower energy costs in China.
That's all
and
about
looser regulation in China.
Which we have talked about many times. They are building an awful lot of nuclear power plants there in a shorter time frame than we're able to. It's still years, but nonetheless shorter. They are putting up solar capacity. Again, their ability to quickly create energy for the AI infrastructure
does matter.
Matters.
Because it's the big bottleneck.
And then when you can give subsidies to those companies and have them, I mean, he says free, it's not, but
right.
Low-priced energy, that is very important.
Yeah, look, but in an otherwise fantastic quarter, Renee Haas, ARM, just says, look, it's energy. That's the problem. Or else we would be on fire. And by the way, I don't know whether Renee's stock is down. If it's down, you want to buy it.
It's down 3 pre-market.
It's down 3. It was up 6 last night.
Now, what we also have here is capital markets that obviously are putting in place the equity and debt financing to create all of this compute.
Right. But
that continues.
But not government backstop?
Well, that's what I wanted to get to, because it wasn't just Jensen Huang walking back some of his comments about China perhaps winning. Sarah Friar, the OpenAI CFO, in a conversation at a Wall Street Journal panel yesterday, said some interesting things about the possibility, at least, of government guarantee to a certain extent around debt that might be taken on by an OpenAI, for example. She walked those back. We'll have her walk back in a second, but take a listen to the comments.
This is where we're looking for an ecosystem of banks, private equity, maybe even governmental, the ways governments can come to bear.
Meaning like a federal subsidy or something?
Meaning like just, first of all, the backstop, the guarantee that allows the financing to happen. That can really drop the cost of the financing, but also increase the loan to value, so the amount of debt that you can take on top of an equity portion for
some federal backstop for chip investment.
Exactly. And I think we're seeing that. I think the U.S. government in particular has been incredibly forward-leaning.
Fannie or Freddie, perhaps, for AI infrastructure debt. But she did go on LinkedIn to clarify and saying backstop, it muddied the point. She did say exactly when the reporter asked backstop, but American Strength and Technology and the rest of it there from Sarah Friar.
Then there's Google today announcing it's rolling out an in-house AI chip that it says is the most powerful and energy efficient yet, as the tech giant takes aim at NVIDIA. Our Mackenzie Sagalos is digging into that for today's Tech Check. Morning, Mac.
Hey, good morning, Carl. So Google, it is opening access to its most powerful AI chip yet. It's called Ironwood, and as it leans harder into custom silicone, it is very much becoming a core part of its cloud strategy. Now, the chip was introduced in April for internal testing, but is now moving into broad availability, and this is key because cloud wars, they have officially become chip wars, and if you don't have your own silicon, you are already playing from behind. Now, Amazon has Trainium, Microsoft has Maya, but analysts say Google's in-house chips have an edge on the competition, part of why they've been winning business from rivals. Just in the last few months, Google has landed cloud contracts with OpenAI, Meta, and Anthropic. Now, Mizuho points to the distinct cost and performance advantage of TPUs. And Alphabet CEO Sundar Pichai said as much on last week's earnings call, bragging that TPUs have been one of the biggest drivers of cloud growth over the past year and that demand is only accelerating, which is why Google's investing heavily to scale. The optics help too. TPUs are the hardware behind Gemini, Google's in-house AI model, which has gained major traction this year.
All right, so speaking of NVIDIA, Mac, Jensen Huang is actually now walking back some comments he made to the Financial Times, claiming that China is going to win the AI race. How exactly does that play out right now?
So we saw this about Face. So the company put out a statement on social media soon after that, notably softer than his claim that China was going to win the AI race. And this comes at a time that NVIDIA is really taking it from all sides. Their H20 chip, it is still stuck in approval limbo for an export license. So he's wrangling with the U.S. government on that. And then both NVIDIA and AMD are up against tougher restrictions from Beijing. You've got Reuters reporting that China's forcing state-backed data centers to use domestic AI chips. In some cases, they're being forced to tear out foreign hardware, according to Reuters reporting. You've also got Beijing conducting a national security review of NVIDIA's chips. So at this point, Jensen Huang, their CEO, is saying that their China market share is down to zero. And then last month, there was all this hope around those bilateral talks between President Trump and Xi Jinping in South Korea that maybe we'd get some progress on chip policy, and that hasn't happened. So I think that NVIDIA very much feeling like this negotiating tactic in a larger trade war.
All right, AI data center stories, I think it's one for the ages, right? Which means it's always going to attract some doubters. Even rural towns are actually voting against having them there. I think it's a wasted opportunity for these towns. I mean, look behind me, folks. These stocks that are priced in, most of the names are associated, with the building this stuff, they're up huge, right? They're up significantly. However, as the story has evolved into a multi-trillion-dollar endeavor, more folks are jumping on the doubt bandwagon. Where's the money coming from is a valid question. And of course, we know now that the funding has gone from free cash flow to this bar behind me, loans and things like that. And those loans, I think, is what's throwing some people off, particularly this off-balance sheet stuff, right? Through private credit, scaring a whole lot of folks who lived through the tech bubble. Off-balance sheet. So a couple of weeks ago, Jensen Huang, he entered into talks with OpenAI. He guaranteed loans so they would buy his chips because they were thinking about buying Google's chips. Then Jensen said yesterday that China's going to win the AI race, in part because China subsidizes their businesses, right? Think about that for a moment. So all of a sudden yesterday, we also hear from CFO, at least the story goes, that OpenAI suggests that they want or should have a government backstop. I will say today, OpenAI has walked back those claims, but let's face it, the damage is done. Look at the pressure in the market. Now, some read these headlines as imminent implosion of AI, but it's clear that Jensen, Altman, and the rest, they just want their cake and they eat it too. I've said this whole thing is this AI race is akin to a nuclear arm race, and we must beat China. On that note, though, if taxpayers are going to bear any loss, then they certainly should bear and share in any potential profits. Now, regardless of how this shakes out, the AI trade, in my opinion, is still in its early stages. Massive upside development for deployment of AI compute and the build out is still beginning, folks. My next guest also has been a huge believer in AI. In fact, he's made a lot of folks a lot of money in this. So I want to just see if he's taking some off the table. Bringing Valtreon CEO Rob Luna. Rob, of course, this story it doesn't go away, in part because now these firms are borrowing money and people are saying, how can you borrow $2 trillion?
Yeah, look, I think it's a healthy amount of skepticism. You should always have. It's something we saw it in the internet, and we saw, look, you had the incumbents that did well, you had the pretenders and the contenders, and anytime you get a big opportunity like this, Charles, you're going to see this. And I'm someone who's looking through private deals all the time. I can tell you, I'm looking at some of the ways some of these data centers are being funded by people who were waiting tables a year ago. There are some scary things going on out there. I think those are going to definitely collapse, but I don't think this is a systemic risk by any means. And I think when you're seeing people right now coming out and trying to talk down this AI trade, you and I know both.
Right.
The money that's been made this year was not in the S&P. It's in the small names. They haven't participated in it. So it's been in their best interest to try to talk those names down, Charles.
So you got MU up huge. Full disclosure, my subscribers take profits today. Seagate is another name. Oklo. Are you still holding those names?
Yeah, I still hold all three of those. We've also, like you, taken some profit off the table, Charles, because you've had massive runs. But I think for the next 2 to 3 years, you want to be in these names. We're only a few years into this bull market, Charles. They usually go 5. I don't see the big hit coming until the Fed starts to raise rates. Until that happens, these are names you have to own. Buy them on 10 to 15% pullbacks.
All right. I can tell you, you've been spot on, my man.
All right, I hope you're all doing well today and staying calm in this market. Today was a red day for much of the market as we have multiple things happening at the same time. I'll very quickly mention some of those. This morning, we got U.S. challenger job cuts for the month of October, and they came in notably higher than the previous month. This spooked some market participants as worries about a cooling labor market caused the market to question whether the Fed is behind on cutting interest rates. I also wonder what role AI had to play in the uptick in job cuts. Also today, there was more back and forth about the government shutdown. There's also been a lot of talk about the Supreme Court case regarding whether or not the administration's tariff policies are legal. The issue here for the market is a lack of certainty. Before arguments in this case began, the market felt like it had some clarity about tariff policy moving forward, and now the whole tariff situation is once again in question as the market awaits the Supreme Court's decision. The market faced a couple other headwinds today that are directly relevant to NVIDIA, so let's quickly cover those. Jensen recently said that China will win the AI race with the US. Jensen reiterated that half of the world's AI developers currently live in China, and where the developers go, those are the platforms that will succeed. If half of the world's AI developers cannot build on NVIDIA's platform, those developers will turn to Chinese alternatives. I think Jensen's argument is very reasonable and measured. The US gave up a major strategic advantage by withholding lesser chips from China, because now China wants to reject US chips entirely and develop their own domestic alternatives. White House AI and crypto czar David Sachs made a post on X today, and he appears to agree with Jensen on this issue. Another news story unfolding today was backlash to recent comments made by OpenAI CFO Sarah Friar about a government backstop. Sarah clarified on LinkedIn that OpenAI is not seeking a government backstop for their infrastructure commitments. Then on X, David Sachs reiterated that there will be no federal bailout for AI, and he said that he doesn't think anyone was actually asking for a bailout, but company executives can clarify their own comments. He's directly referring to Sarah Friar's comments. This whole situation weighed down many of the AI and semiconductor stocks today. Also today, it's being reported that Google's new TPU Ironwood will be widely available in the coming weeks. This is a big deal because previously Google's TPUs were reserved for Google's own internal use. Now they will be offering their TPUs to other companies, bringing them into direct competition with NVIDIA. This is one of the main reasons NVIDIA traded lower in today's session. I want to briefly remind you that NVIDIA develops general purpose compute, and Google's TPUs are custom ASICs. And the good news is that there is plenty of demand for both. I don't view this news as a major problem for NVIDIA. There is plenty of room in this market for many hardware providers to all succeed as demand is so extremely strong. Additionally, Google will continue investing heavily in NVIDIA systems because they offer that capacity to their cloud customers. All right, so that's a lot of what was weighing down on the markets and also weighing down on NVIDIA stock today. Now I want to cover both Iron and MP Materials because both companies reported earnings today. First, let's talk about Iron. Iron reported a fantastic quarter. I don't know what the stock will do in the short term, but honestly, I couldn't have asked for a better report. I'm just going to cover some highlights briefly. First, Iron's net income was greater than their revenue. This is due to unrealized gains primarily on prepaid forwards and cap calls in connection with senior convertible notes. Iron announced that they are now aiming for 140,000 operational GPUs by the end of 2026. This is up from the previously announced 100,000. So a quick recap. Iron announced they were going to have 23,000 operational GPUs by the end of Q1 2026. Then they announced the $9.7 billion Microsoft contract, and that brought the total GPUs up to 100,000. And now, after today's earnings, Iron is guiding to have an additional 40,000 GPUs operational by the end of 2026 for a total of 140,000 GPUs. Iron has recently been installing GPUs at their Prince George site in British Columbia. That's where the original 23,000 GPUs are going. And the additional 40,000 GPUs that Iron announced tonight will be installed in Iron's other 2 British Columbia data center campuses, Mackenzie and Canal Flats. Notice that these are active data centers where Iron simply has to remove the ASICs used for Bitcoin mining and install the GPUs. Iron reiterated that they are continuing to see strong demand, including from hyperscaler customers. And interestingly, Iron did not guide to have any GPUs operational at the upcoming Sweetwater site by the end of 2026. That's interesting because Sweetwater is on track to be energized in April 2026. Could we get an update on more GPUs at Sweetwater before the end of 2026? That remains to be seen. The 140,000 GPUs that Iron announced today will bring their total power usage up to 480 megawatts, about 16% of their total 3 gigawatt footprint, meaning they have plenty of room for expansion even after the 140,000 GPUs. Iron will likely sell whatever capacity they can bring online for the next 2 years as the world continue to be compute constrained in the face of extremely strong AI demand. I continue to be bullish on Iron for at least the next 1 to 2 years, and this was a very solid report. Now let's quickly cover MP Materials earnings. I want to preface that this one is much more complex, and I'm still trying to process everything that we learned, so please bear with me on this one. MP said that they expect to return to profitability in Q4 of this year and beyond, which is great. MP explained that payments they receive from the Pentagon as part of the PPA is technically not revenue because the Pentagon is technically not MP's customer. They're a third party. And so the payments that MP receives from the Pentagon under the PPA will not be included in revenue, but will instead be listed under revenue as an operating income line item or expense if the market price of NdPr exceeds $110 per kilogram. Additionally, MP reported revenue that was lower than the previous quarter. This is because MP made the decision to discontinue sales of concentrate in Q3, and they decided to stockpile ahead of the price floor commitment going into effect in Q4. MP told us on the earnings call that they're stockpiling as they ramp up refining operations. Next quarter, NdPr production is projected to be relatively flat quarter over quarter due to repairs and maintenance. And MP also told us they're still on track to begin magnet production at their Independence facility by year end, which is good. All things considered, I can understand why the stock traded lower in the short term. Revenue was lower sequentially due to MP's decision to stockpile inventory. I think the PPA payments not being counted as revenue may have spooked some market participants. And next quarter NdPr production guidance was relatively flat sequentially due to repairs, and that's not ideal in the short term. Still, there is some good in this report. Magnet production is expected to begin by year end. MP expects to be profitable in Q4 and beyond. And MP will still receive at least $110 for every kilogram of NdPr thanks to the PPA, even if that money doesn't technically show up as revenue. And so I can understand why the stock is lower in the short term, but I don't think that what we learned today is a deal breaker long term. The real moment to look forward to is late 2028 when MP's 10X facility is expected to begin commissioning. At that point, MP will have unlimited demand for their product from the US government for at least the next 10 years. And whatever they produce, they will sell. And the magnets that MP produces will be crucial to the oncoming wave of physical AI. Physical AI is going to fundamentally transform society, and NVIDIA stands to benefit massively. Physical AI is a big reason why I think most analysts' long-term NVIDIA estimates are too low. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI and embedding themselves as the indispensable foundation supporting all of it. Right now, most analysts are hyper-focused on NVIDIA's data center business, and I don't think the future growth of NVIDIA's physical AI business is being adequately factored into most analysts' long-term estimates. I am completely serious and not exaggerating whatsoever when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. I'm sorry if I sound like a broken record mentioning physical AI so much in these videos, but that's why I'm doing it. I don't think it's getting enough attention, and it's a big reason why I think most analysts' long-term NVIDIA estimates are too low. In addition to physical AI, NVIDIA has multiple other large long-term growth opportunities, including sovereign AI, enterprise AI, many AI-native startups, telecommunications, and 6G and quantum GPU supercomputing. Jensen believes that quantum computers will not replace classical systems, but that they will work together and complement each other. These additional opportunities and customer segments will increase the need for compute even further. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.